Q1 GDP, 8.8%, bang on in line with what ET now estimated. The Q1 GDP was seen at 8.8 versus 8.6%. That is exactly where it has come in. And this would, I mean, anything above 9% would have really excited the markets. I'm just waiting to see how the initial reaction on the index is. Fairly flat, so pretty much in line with estimates. Bring up the individual forecasts also for you, and these figures will also start trickling in. But on the face of it, it's the fastest pace since December 2007, mind you, is where it grew at 9.7%. So since then, this has been the best quarter. Not on unexpected lines, because industry was anyways expected to pump up the GDP numbers for Q1. Remember, IIP numbers for Q1 were above 11%, so that would have propped up for sure. The numbers will start trickling in, but on the face of it, 8.8% in line with estimates. No surprises, none negative nor positive. In fact, the higher end of the economist forecast was at 9.4%. This is pretty much in line with what we estimated.
Agriculture numbers have in fact come in above estimates. We've seen agricultural growth come in at 2.8%, with a forecast of 2.6 odd percent. Most services also are expected to do well, so we'll keep account of how the social and personal services have grown. This time around, the growth rate was actually supposed to be seen because of the kind of growth in the mining and manufacturing sectors. Those numbers will also be coming out on your screen, but particularly a growth rate of around 12 odd percent was seen coming in from both these sectors. So mining and manufacturing, key focus. From the face of it, there you have the manufacturing growth at 12.4%. So that is also a tad bit higher than what we had seen of about 12%. And even agriculture, on the face of it, not looking too bad at all. We've been factoring how high growth is actually going to be there. The chief economic advisory in the finance ministry, Mr. Kaushik Basu, had actually forecasted a growth of about 9 odd percent. On the higher side, in fact, the analyst community had pegged it 9.4%, lower side of about 8.2 odd percent. So this has come in bang on estimates, 8.8 odd percent. Electricity growth at about 6.6%. So the key contributors this time around have also been seen in line, a little bit higher than what we had estimated. Now the real GDP growth, the first quarter, is expected around 8.7% vis-a-vis what we'd actually seen of forecast of about 8.1%. Goes to see if that also comes out. If there is a revision of that also, we'll go to see if that comes out in just a bit. But there you have a trade transport growth at about 12.2 odd percent. So all in all, after the kind of disappointment in the IIP numbers, which saw a growth of 7%, the GDP numbers are seemingly on track right now. The growth potential is still on the fairly higher side.
Yep, on expected lines, Devina, because the Q1 IIP growth at above 11% kind of prompted this for sure. What's come as probably a bit of a downward uptick is what's happened in the mining. 8.9% growth that has come in from mining. Manufacturing at 12.4%. The real surprise, as Devina said, has to be agriculture, 2.8%. Well, it was seen at 2.6%, so net 20 basis points higher than what was estimated. But agriculture, remember, even for FY11 as a year, it is the agri growth that is really the one which is pegged to be the big surprise in today's session, for the GDP for this year.